You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts, Uncle Mike TOSAW from St. Charles Wealth Management, along with Mark the Greasy Meatball Sebastian and Andrew the Rock Lobster GIOVINAZZI from OptionPit.com. And now, get ready to hit the Option Block.
All right, everybody. That music means we are back. Did you miss us? It's Thursday. It's time for what is usually episode due, this week, episode uno of the Option Block. Don't blame us, blame the market gods. Of course, market's closed for the Labor Day holiday here on Monday. So no Monday episode, no guessing the wrestler this week, all that fun. That'll come back next week. Hope you folks had a great holiday weekend, enjoying the last vestiges of summer out there. Of course, if you want to enjoy more content on the network, you know where to go. theoptionsinsider.com/pro. Or for you cool kids, you like to get past the velvet rope, you want to go in the secret cool kid entrance /secret club. That'll get you live access to this. Everything else we do throughout the week will get you exclusive shows like Options Oddities and our increasingly fascinating pro Q&A series. And of course, the much coveted, highly desirable Options Insider Pro Trading Crate. Just gave one of those away a couple weeks ago. Another one coming up soon. So get in there for the month of September to get your name in the hat. theoptionsinsider.com/pro. Special fun happening tomorrow as well. This time tomorrow, noon central tomorrow. It's going to be live and open for everybody. Volatility Views 500 list. Yes, 500. So this show's already north of 1,000. But the only other thing nipping at its heels is Vol Views. It's been around for quite a while. 500 episodes, listeners. So that should be a fun partay. Make sure you clear your calendars for tomorrow at noon. It should be fun out there. All sorts of fun to be had. Vol Views tomorrow. And of course, let's see who's joining me for some fun on the show today. Let's go out first to the quiet, the sleepy hamlet known as St. Charles, where we are joined once again by the uncleist of mics. I defy you to find another Mike who is uncler than him. He is Uncle Mike TOSAW from St. Charles Wealth Management. Uncle Mike, welcome back to the program, sir. I heard you had another Mike step up to you, said he was uncler than you, and you had to put him down over the weekend, sir.
He got dealt with. Let's just put it that way.
It's in the title.
Great to be here as always.
It's in the title. The uncleist of Mikes. There's no one uncler than you. All right. At least when it comes to Mikes. All right. And let's go around the horn and then up the coastline there, all the way to the dark and stormy shores of Maine, where we are joined once again by the rockingest of lobsters, Mr. Andrew GIOVINAZZI from OptionPit.com. Mr. G, welcome back to the show. I'm a little nervous because on a normal show, you have a hard time, shall we say, with the technology. Now we've been off for a week. Are you going to remember how all the buttons work, sir?
I don't know. Am I on? Have I muted myself? Have I self-muted?
So far, I can hear you. So that's a good sign.
That is a good sign. Yes. The actually Maine is getting cool. The coolness is happening, but not dark and stormy. It's sunny. it's sunny here. And I just saw something from CNN just came out, and they said, hey, get ready for next summer when climate change comes again. And I could have sworn, isn't that just a change in seasons? But, I guess in Maine we have seasons. So.
Climate change is seasonal now? I didn't realize. I didn't know.
Yeah.
It just came and went with the midsummer period. It's just an August phenomenon. Then it goes away. That's it. That's all you get. The rest of the year, just pollute till your heart's content. Good stuff. As we keep on rolling, let's see what kind of good stuff we can find in the market. I guess it kind of depends which way you lean, because we are turning yet again, listeners. It is time for the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, listeners, welcome to the block of trading. This is, of course, the portion of the show where we break down what the heck is lighting up our tapes out there today. And it's another one of those days, listeners, where you don't like the markets, just wait 5 minutes. S&P, broad indices, they were looking good. They were looking strong. They were looking robust earlier today, listeners. Started the day around 39.5, and not that long after that, we had rallied over 50 handles back north of that magical, mythical 4,000 level that we've been kind of hanging out pretty substantially below for the better part of this past week. And it seemed like all was right with the world. Then, of course, as the option block approached, the markets turned, the worm turned. We saw a sell-off pretty much right back almost to where we started again. It rallied 50 handles, and then it sold off pretty much exactly 50 handles again. And the market was looking dire. Then they tried to rally it again, got up to around 39.80 or so before it seems like, at least for now, the bulls have worn out their horns. The bear's claws are back out. We are back now red across the board here in all of the major markets. So it's been quite the topsy-turvy market. As we're kicking off the day, or kick off the show here, the S&P is off about 0.1% now. Dow off a similar percent. NASDAQ off about a third. So again, one of those days, listeners, just wait 5 minutes and you'll have a very different market on your screen in front of you. As of right now, the snapshot we have right now, listeners, VIX was at about 24.25 when we kicked off the show. Puts it down almost 3 points, about 285 from where it was on last Thursday's show. Remember, there was no Monday show, so we're going back a week now. VVIX 86, down a whopping 4 handles. We were hanging out at a 90 this time last week. VXX, who knows what the hell it's doing. Today it's decided to be down almost 1.5 points, down to about 1835 right now. UVXY back down below the 10 handle, 960, down about 1.2 points. Will it stay there, given what we're seeing in the market today? Perhaps not. We shall see. SVIX was up almost a full point, about 0.85. It was at about 1285 when we kicked off the show. UVIX, our levered friend, 960, down 1.6 points from where it was this time last Thursday. And VolQ, the at-the-money vol of the NASDAQ 100, which does have options on it. The Meatball was surprised to discover on the Q&A the other day that there are options on VolQ. They are new, but they do exist. So you have the futures, and now you have the options as well. Weirdly enough, futures at CME, options at NASDAQ, but you can trade them. A VolQ 29.30, down nearly 3 points, 270 from where it was this time last week. Let's go around the horn. Uncle Mike, I may have mentioned you once or twice in the intervening week since you and I last spoke on the network, because we have had a lot of red on the screen since the last time you and I spoke. So I think we pontificated aloud. What is Uncle Mike thinking on a day like today? So Uncle Mike, it's been a mostly red week. It looks like we just ticked green again, so I guess you're happy again. But what's been lighting up your tape on this red week coming into this topsy-turvy day, sir?
Well, the first thing that's lighting up my tape is that I think we need to start with the option block indicator. I think last week on the show we averaged a point in the S&P every 2.5 minutes or something like that. I just think we need a 24-hour broadcast, and that's how we can make this market go up. And so sure enough, right now on the option block, since we started broadcasting, you look at the S&P 500 for the 3-minute price bars, we're having a nice one right now. So coincidence? I think not.
I will speak to my producers. We'll see what we can do about the 24-hour broadcast. Just for you, sir.
All right, we'll see what we can do.
You may need to pitch. You may need to pitch in for me in, like, let's say the 3 a.m. to 7 a.m. region. Let's just say
I can handle that, no problem. What else would you rather do than talk about options all night? But anyway, on a serious note, just from what I'm seeing on the markets today, the Fed seems to be the thing that everybody's talking about. Are they going to raise 50 or 75? And honestly, I'm of the school of thought, who cares? The bottom line is that it sounds like they're pretty adamant about wanting to have the rate go to 4%. That seems to be the more magic number. Now, whether they want to go 75 and 75, or whether they want to go 70, 50, 25, or 50, 50, 50, or whatever combination you can come up with, it sounds like it's pretty logical that they're going to try and go to 4%. So with that being said, one thing that I will say for the Fed, they do seem to do, at least this year, they're prepping people for bad things well, so to speak, in that the way with which that they talk about things, they say the right buzzwords, if you will. Now, whether they do what they say, who knows? But it does seem to be the fact that we have had such a downturn in bonds this year, such a downturn in stocks this year at the same time, and we still have buyers. That says something for the people who train the Fed on how to talk to the media. I'll give them that. But I think ultimately, until we get to, I really believe we're going to go to 4% with the Fed funds rate, or 3.8 or something generally close to there. And so until we get to those levels, we're going to have more rising interest rates. I'm of the school of thought that in the bond world, it's probably factored in for the pricing of it. And so will the 10-year go to 4% as well? I mean, who knows? We'll see with what happens on it. But I think a lot of people believe what I believe, and that the Fed is going to go to 4% and see what happens from there. Now, the reality of it is that if the inflation numbers continue to stay high, they're probably going to go above the 4% level, and we need to be prepared for that. I think that just with the rising interest rates with which we've had, I am of the school of thought that a lot of this is factored into the market, but we'll see. I've been wrong before, and we'll see where it goes from there. Some other things of note today, in the commodity land, silver's relatively flat today, so not a lot of movement there. The other thing of note to look at this stage is oil. Oil is up $2 on the day, but it's only at 84. So we've actually pulled back a little bit in the oil space. That's something to continue to look at. There is a war going on in Ukraine, so we do still have the Russian issues that are coming into play. We do have my beloved Bitcoin below 20,000, so we have that to look at as well. And overall, I think that just at this stage, the big story right now is the Fed. And in the S&P, we're knocking on the door of 4,000 again, so we'll see if that number we can push through that. Markets had a big rally yesterday. We were above the 4,000 level for a little bit today, but we're back below it, but not by that much. So a lot going on, and I'll pass it back to you, Mark.
All right. And let's go out now to the dark and stormy shores of Maine, where he was celebrating all the red on the screen. The man likes a nice down market, a little vol pop. That's good for what ails the Rock Lobster. Mr. Rock Lobster, I know you've been off for a week. What's been lighting up your tape on this crazy, mostly red week? And then, of course, this weird whipsaw-y day today, sir.
Yeah. Well, I think so. Normally I would talk vol. We've got, so basically Canada just raised 75 basis points. The ECB just raised 75 basis points. Like I think the die is cast. For the Fed, they are going to raise.
Yeah, but China's cutting rates, so what the hell?
Well, the Chinese have a whole different set of problems, right? They've got.
You don't count you don't count China in with all the other fun.
I stopped looking at China just because the equity market was giving me it hasn't gone anywhere in 20 years since they listed stocks. So. As much as I complain about our government sometimes, they try not to destroy the equity market by silly regulation, although sometimes they do. And that can happen in any administration. But China seems to. So they also have a problem right now. I just think they have a housing, like a confidence in housing. Like they over leverage builders. I mean, I think they just have issues that seem to be like our issues are basically the government borrows too much money. That's our issue. In China, I think everybody borrows too much money. So like our issues have been basically the U.S. government has monetized a lot of activity, and how that comes to roost, who knows? But at this point, they're raising, and I think most investors know that it's necessary at this point to ward off some other bigger problems down the road. And I hope it's enough. They're doing enough, and they're going to continue until the inflation rate comes back to some kind of normal. But that's only going to happen if you get the fiscal end has to slow down. They have to stop. And clearly, our current administration has not gotten that message yet, because it's still a bit of a spending spree. But I think the Fed is sending that message pretty clearly. All the other, if Canada is going to do it and the ECB is going to do it, the Fed's going to do it. So that's why you're seeing.
I'm going with China. I think the Fed's going to cut rates at their next meeting. I'm just putting it out there.
Yeah, I
huge full point cut.
Yeah, I think the CPI number will be. I think we still have 8 point something percent inflation. I don't think it's slowing down a whole lot yet. Anybody that's buying groceries or most other stuff, gas is a little cheaper, so that's good. So as the price of gas has come down, and that, I think a lot of that has to do with just what's going on, geopolitics and stuff like that. It's kind of going in and out. But like the price of groceries, the price of a lot of things have not come down. Coal, I just had to pay 50% more for the same pallet of coal I bought last year. That's a pretty big jump. That's not 10%. That's $6.50 a bag went to 10. That's a pretty big jump. It's still there, and the reason why, because of course the Chinese are buying all the coal that we produce. So these are all issues that have not worked themselves out, although rates going higher is necessary in my view. And the market would rather have, and TOSAW, I think, comments on this, the market likes stability. Even though it's not exactly what it wants, I think investors would rather see the Fed is on the proper path. And right now, the proper path, rates have to go up. And I think that's why we're rallying a little bit. But so we're rallying to 4,000. Then where do we go, right? What's the bull case? So, and volatility is still in the danger zone. It's hard to believe, but it's just there all year, so we don't pay attention to it anymore. It's still the top quartile of volatility, and realized vol is still relatively high. So again, I would say, all right, we have these things. Now do we just are kind of I'm more of the mind that the market just kind of like, beats around a little bit, doesn't do very much. And probably the better trade is selling vol, to be quite honest with you. And then on a total non sequitur, Regeneron is a stock I like and I own. It's in my kids' education accounts. Is up $112 today, almost 20%. I have no idea why, but it's making me happy right now. That's all I can say. So there you go. I don't know why. When it would go down to about 550, I would sell the 500 level put. Actually, the 500 450 put spread, to be exact. I haven't done it in a while, but I do own shares, and I thought it was a good ride because it was a quality company that seemed to do they actually had pandemic drugs for COVID that actually worked. So, hey, and now they're getting a little bit of a bid. Don't know why. It's not earnings related or anything, but
promising eye disease drug trial results.
There you go.
So eye disease.
So it's probably a good time to dump my shares because very, very rare does a stock maintain the upside. But
so the kids go to the Ivy League, or maybe you send them to community college and you expand the palatial compound. Up to you. The choice is yours.
I think just buy a she shed for the wife. I think she'll be happy because I have no time to build one, even though I want to. But
there you go.
There you go.
Keeping the wife happy
for the kids will be fine. I just think they should be electricians. Quite honestly,
I was joking about that with my wife just yesterday. I was like, "Why we have lost this whole technical school thing in this country? People are spending hundreds of thousands of dollars to send their kids to college to be whatever, be baristas with liberal arts degrees, right? And meanwhile, these kids who have actual skills like electricians are making close to six figures a couple of years out of high school. It's like, wow, we have lost something in this society.
Well, my kids are actually looking at it because there's such a shortage of help in this, at least in this state. A guy came in, they spent about 2.5-3 hours wiring some stuff up that was just a little bit out of my my Maynard do-it-yourself pay grade, like $1,500, 3 hours. I'm like, wait a minute, that's a pretty good deal. I think cost of some of the goods is probably about $250 net, but still, hey, you can make money doing that.
$500 an hour. I'd say that's skilled labor. You got a lot of lawyers and doctors who aren't charging that, right? So yeah, it's crazy times out there, listeners, as we digress into all sorts of fun things. By the way, I was joking earlier, obviously, about China. Though, interesting enough, the drumbeat on China has been persistent ever since I was pretty much in college. Here comes China in the rearview mirror of the U.S. And now for the first time, you're starting to see some talk about maybe that will never happen, because starting to look inside the kimono there a little bit, and maybe what people are finding not quite as healthy as robust as perhaps people have been assuming for years. But we won't go on about China or about the state of vocational school here in the U.S. Instead, let's go on to what's going on in the markets today, listeners. And, a couple of things VIX tends to like from an options volume perspective, at least. Usually a pretty decidedly red day. But if you can't have that, a decent backup is a whipsaw-y kind of day. And that's pretty much what we have right now, listeners. So VIX is actually putting up some numbers today. I mean, it's not blowing the doors off. It's not north of 400,000 already, but it is putting up some numbers. It was north of 250,000 just a few minutes ago. Now it has ticked up even more. It is 267,000 contracts on the tape right now. The ADV still hanging out just around 400K, about 404. So we'll see if we break past that today. On track to do so right now. We'll see if things quiet down in the latter portion of the session. SPY on the rampage today. 5.35 million contracts on the tape. It's already almost at its ADV, which has already just increased since our last show. It's up to 6.8 million, almost 7 million contracts a day now in SPY. That's a heck of a lot of paper, listeners. The S, 1.6 million contracts already. That's a lot of paper for the S right now. The ADV, 2.34 million. Seems like it's probably going to hit that. Small caps, actually the laggard, a paltry 418,000. I say paltry because the last time we did this show, they were pretty much almost double that by now. The ADV has surged, though. It's up almost 75,000 contracts since our last show. It's up to 876,000. So small caps doing some numbers of late, and it looks like they're probably going to be on pace to maybe hit that inflated number right now as well. You want more about small caps? Join me for TWIFO in a little bit, listeners. We'll get into all that fun. And the Qs, 1.7 million contracts on the tape right now. The ADV, 2.52 million. So the Qs looking pretty much normal. That's a normal day for them. Let's go on out to the single names and see what we find out here. And again, when we're seeing a lot of topsy-turviness in the broad indexes, it doesn't always translate into a lot of single name paper. That's kind of what we're seeing again today. We are below 200,000 yet again to break into the top 10 today. That gets us to Lyft, number 10, 193,000 contracts on the tape. Lyft bucking the trend at about $16.75 right now, up a little over $2 or nearly 14%. So a good day for Lyft. I'm not sure what is driving all that upside, but Lyft feeling a little bit of the upside. Number 9, we have 205,000 for good old Alphabet, 108 and about a quarter, off about $1.25 right now. They've done a little bit of rally. It got up to almost 109. Actually, 109.60 was the high for the day. So they're off $1.50 from that. So they've had a little bit of movement out there today. This top 10, the bottom half of our top 10 at least, is looking kind of similar. Number 8, we've got the artist formerly known as Facebook, now Meta. They are a frequent offender these days. By the way, you see that video of Zuckerberg training MMA? That was kind of interesting out there. 252,000 contracts on the tape for number 8, Meta. They are up right now, up about 40 cents or about 0.25%, trading a little bit shy of 161, about 160.80 out there right now. Number 7, this is a new addition. Haven't seen this one in a while. This is Bank of America. 260,000 contracts on the tape for them. They're up almost a full $1 or nearly 3%, trading 34 double right now. That's pretty much the high for the day right now as well. So I have a nice little lift out there for good old BAC. And number 6, this is the name that's kind of been an interesting one to watch for the course of the past year. We had written them off over a year ago on the show. So who really still uses Snap? Seemed like the kids had moved on to TikTok and Snap was kind of ailing. Their spectacles had gone nowhere. Then they had some surprise numbers. People thought maybe Snap was back. And then it seems like the last couple of cycles, not so much. Snap, number 6 today, 317,000 contracts, up $1 So $12.50. I think their CEO came out and said, we're not going to go away. They're laying people off, but we're going to get more people to like us again. So I guess that's enough to talk the stock up. It's up nearly 9% right now, even though from a 52-week high perspective, it was $83.34. So they have a long way to go, trading right around $12.50 right now. But they have rallied about $3 from their low. That was $9.34. They hit that, looks like, back in mid-July, actually. It's like around, mid-July. So intriguing stuff here for Snap. Are you buying this turnaround for Snap? Do you own a pair of spectacles or perhaps that camera drone that really seemed to go nowhere either? Hit us up. Let us know. I have a pair of spectacles somewhere. I don't think I've ever even opened the case and used them. Because we don't use Snap. It was one of those silly things. You see those crazy vending machines. Everyone was buying them. We wanted to try it out for the old socials. I don't think we ever got around to it. Number 5, we've got the Amazonians. Today, 421,000. Now we're talking some numbers here. They are off about half a buck, or about 0.5% as well, trading right around 129 right now. They've had a few buck range out there today, like just about everything on the tape, pretty much. Quite the range out there for a lot of these names. Let's go to number 4. We got a frequent offender here, holding down its usual spot. This is NVIDIA, 445,000 contracts on the tape. Up about 1%, about $1.35 today, trading 138.5 right now. NVIDIA's had some rough times of late, I think, to put it mildly, and has recovered a little bit. Got down to, looks like 132.70 back a week ago, last Thursday, when all the talk with China and the chips, and it has rallied, looks like about $6 from there. So nice little rally for them. Then number 3, again, hanging out in the chip camp, we've got AMD. 507,000 contracts. So all the way up to number 3, we're finally over 500,000 contracts, listeners. $82, pretty much even for AMD, up about $2.50 or 3% today. So nice little rally for AMD today, even though they were at 83.30 earlier. They have given up some of that. Numero 2, the old Apple. Did you like the new watches and iPhones and everything else that they announced this week, listeners? Apple, buy the rumor, sell the fact. They're selling it right now off $217. Or about 1.4%, 153.75. So it has taken a nice little retreat here from its high of about 174.5. It hit about mid-August, when it was just within spitting distance of its all-time high again. They have taken it down a little over $20, almost $21 from there. So Apple retreating a little bit today. Maybe not enough innovation, and Uncle Mike hasn't gotten back in there sometime. He's waiting for his innovation index to tick. Maybe that'll be a strategy block for today, the innovation index of Apple. And then number 1, you can probably guess, listeners, it's Tesla. 1.36 million contracts on the tape for Tesla. It's up nearly $3, or about 1% right now, trading 286.5. It's like it's had a range of about 281.30 on the dark side. Actually got 279.76 was the low, and 288.60. So my goodness, 9-point range almost on the day. So that accounts for why we're seeing some numbers out there. Lawsuit with Musk and Dogecoin, Chinese factory deliveries, all sorts of stuff driving the paper out there in Tesla today. Speaking of things driving paper, there were some earnings announcements this week, including a name you may have heard of, like GameStop. Also, NIO, a frequent offender out there. Weirdly enough, not there today. NIO has kind of been a stalwart in our top 10, not making it today, even though they had earnings yesterday. That is weird. Let's do right now, hop off the presses from our friends over there at ORCL. Got some earnings move results reports. Let's go to Dave & Buster's first. They were yesterday after the bell. 43, almost $44 is where they were going into their announcement. They were pricing in 9.7%. They delivered 11.1%. Go figure. A little bit of vol out there in the in-person gaming sector. And they're even lower now. They're off another about 12.15% right now. So feeling the heat out there in Dave & Buster's land, off 5 1/3. So outpacing that straddle. GameStop. You probably heard of this one by now. They were at $24, pretty much even going into their announcement. They were yesterday after the bell. They were pricing in 13.4%. And actually, when we ran these numbers, they had underperformed. They were only trading at about 8.9% out there. Of course, not exactly lighting the world on fire out there, but they're managing to rally right now. They're up, 4.12%. So they're actually up $1. So they have underperformed. Interesting. They're still hanging out up about $1. So actually up about exactly $1. They're at $24.04. They're $25.03 right now. So intriguing for GameStop. but we shall see. Are the meme stocks, is it GameStop kind of kicked it all off? Are they finally going to whimper and die here? It looks like they're talking about partnering with FTX on the crypto side, so they're trying to keep the meme fun alive out there. Today we have, or tomorrow I should say, we have Kroger before the bell. 49, almost $50 is where they were trading. They're pricing in 304. In the past, they've moved 244. So a little bit of extra juice in the old food biz. And of course, Oracle. They're next week, actually. 74.5 is where they were trading. 434 is what they were pricing in the past. They moved 489. So less vol out there for Oracle. You know the numbers by now. Looks like they've been revised down a little bit. They were 125 when we looked at it last week. Now the earnings season report stands at 115% for the last cycle. It's still robust. It's still outperformance. Every week is green. Haven't seen that pretty much since we started running these numbers. And it's certainly a lot higher than the average for the seasons right now, which is 86%. And in terms of, you want a little fun, listeners? Looks like they bought a straddle in GameStop today. You want to see what the levels were, what the expiration looks like? Well, I'll give you the expiration. It was the October weeklies expiring on the 7th. Out there, they paid $667 for it. Interesting. They exited. I'm sorry, they took off a long straddle today. That's what they did. They bought it for $667 and they dumped it for $594. Oh no, lost 73 cents on that bad boy. So, which makes sense, right? I mean, GameStop underperformed. They underperformed their straddle. So if you have a long straddle and you're expecting that movement, you don't get it. You don't take a hit. No new trades lining up here today. Still monitoring a whole bunch of long straddles and calendars for your learning and education. Let's keep on rolling right on into the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
Everybody, time to get weird, time to get wild. And when I say that, what's the first name that leaps into your head? Of course, it's MetLife Insurance. What's crazier? What's wilder than that? This name may sound familiar because we just talked about it not too long ago. MetLife, of course, ticker symbol MET, M-E-T, trading right now a little bit shy of $67, $66.95, up about $0.75 today. So a nice little day for them. On the year, a year ago, they were almost $61. And then they rallied to their high for the year of $73.18. That looks like they flirted with that on April 20th of this year. So they've had a little bit of topsy-turviness, this name, despite the fact that it's what you would assume to be a relatively staid sector of insurance. And Mr. Rock Lobster, we got an interesting one out there today. We've got some pretty sizable prints going up in the Jan calls, the Jan 80 calls. And what we noticed, what first came across our eye of Sauron today was 13,850 of the Jan 80s going up for an even $4. And we thought that was weird because they were 390 at $4. It was a very tight market. So we thought, let's send the eye of Sauron back, see what else it can find. And sure enough, there was a print 3 minutes before that of 10,400 of the Jan 80s going up, also for $4. But that market was a little bit more, I think, accurate. It was 370 at 420 out there. So those were crossed to open when the stock was close to here, 66.70 right now. And then looks like they came back in a few minutes later and put up another nearly 14,000 for $4 out there. Some 390 at $4. They could have been working the rest. Obviously, they got off about 10,000 for $4. And they said, hey, we got another nearly 14,000 to go at $4. We'll leave them there. And then the market ticked up in their way and they got them done. So it's interesting. You might have assumed they could have bought these, but it could have been, it has the flavor of a sale. And also why I bring that up, because I said we just talked about Met not too long ago on the August 25th show. So a couple of weeks ago, there was a big call block of 20,000 of the Nov 75s going up for 76 cents right on the bid. So someone was blasting away at those when the stock was right here as well. The stock was 67.03. It's almost exactly where it is right now. They blasted away at 20,000 of the Nov 75s. Would someone be coming in a couple of weeks later and then buying the Jan 80s? Possibly. but this has the whiff of another block of selling. By the way, those Nove calls are still open, listeners. They are still open right now on those Nove calls. So, Mr. Rock Lobster, I'd be curious to see what your one eye of the Cyclops tells you about these bad boys. You think they were selling these? You think they were buying them? What do you think? And do you think that's related to our Nove paper from a couple of weeks ago?
Wow, that is a many-faceted question right there.
We fire on multiple levels here on the show, sir.
You have to have your thinking hat. You're selling the 80s at $4. It feels like a yield play. I had a resting offer, and then somebody came up and bought them. So, when you're looking at Met, it's just okay, boring, good dividends, write some calls. You're not really seeing. I don't see any. I don't see any Paul Pelosi style call buying in there for for them to change.
Paul's not swinging for the fences in Met. That's not his next meme name.
Or all of a sudden they announce some change to life insurance rules and Met's trading $8. So
the government is investing in life insurance names. Huge.
Yes. It's a big business. It's a big business. So you have that. So I'm just looking at that saying, well, it all just looks like call writing paper to me. Trying to grab some yield. Like, I tell my students, pension funds and retirees need money. So you need trades that are going to produce money where but you might not want to necessarily sell the stock in your IRA, but hey, if you could sell 100 calls and they're $1 a piece, right? That's $10,000. And hey, normal person should be able to live on that when they're retired for a month. So, it's not a terrible strategy, right?
And ironically, MetLife does not sell life insurance anymore to individuals.
Oh, they don't? Oh, well,
no.
Uncle Mike's schooling us here on insurance.
So who do they sell? What do they sell?
Nobody knows. I actually started a little known fact about me. My first actual job after playing professional football for a year, I sold life insurance for MetLife. I was rookie of the year. I did very well with it, but it's a rough life, and I chose not to go down that route. And Options Express was a better career path for me. But now what they do right now, they do a lot with company benefits, and they do stuff with retirement plans and things like that. But the old school MetLife agent, who I used to be one, that no longer exists.
Huh. So
wow.
Our Paul Pelosi scam for the government investing in life insurance, we have to look elsewhere, sir.
I guess we do. So thanks. So you know what? TOSAW kept us from going down that path. I appreciate that.
There you go.
So yeah, but it's still pretty much a sleepy business. You're doing retirement planning or pension planning and all that kind of stuff. So fee-based business. What's funny is I've seen Met as a stock for years and years. I'm just kind of curious. I bet it's not super sexy, but I'll bet you made some pretty decent money owning it over the years, over the last 10 years. Let's see if if it has room in your stock portfolio. So if you're owning it over the last 10 years, you're definitely in it for the dividends, I believe. Yeah. So the low price of the stock, 2011, when everything was really ugly, was $26.77, and now it's $67. So, you're in it for the divvy, right? And right now those divvies are about $2 a year. So I would say it's a dependable place to put money, a great thing to buy when the market, just looks terrible. But, you're not, unless they're changing the rules anytime soon, this will be a call writing stock until the cows come home.
Well, it seems like the paper agrees with you, because there is a whole bunch of paper selling it today, it seems like, and a whole bunch still open in November. So folks are getting their yield on here in MetLife, listeners. Let's flip the script entirely now from a $70 staid insurance name to a $2.50 biotech. Why not? Let's go to IMRA Inc., ticker symbol IMRA. It's the newcomer here to the odd block. Let's see. Trading right now, I said $2.50, up 43 cents or 21% today. So, yeah, it's a biotech. Wow, this thing's on the rampage. Let's see. A year ago, it was trading 4.25. So still looking down from there. But in the last, wow, it was $1.17 just earlier this week. Now $2.43. Looks like this is a name that's involved in sickle cell anemia research. Maybe they just got out of that. Maybe that's why the stock is popping either way. Something is afoot out here in IMRA Inc. And interestingly enough, with the stock popping, usually we see folks loading up to the upside. We don't often see this trade, but someone coming in the other way and saying, I'm going to instead sell a whole bunch of puts. In particular, the 2.5 puts, selling 10,000 of these. They got 65 cents for a 2.5 put. Now, again, those puts were over $1 in the money just yesterday, so bear that in mind. But that's 65 cents for these bad boys. That's a 148 volatility. The stock was lower. The stock was 227. So stock has rallied a little bit. So they're looking even better right now on these puts. Looks like they also came in and did another almost 10,000 a little bit later, also for 65 cents. That was a 145 vol. So a whole bunch of interest in drawing a pretty sizable line in the sand. Now, this is interesting. Again, we don't usually see this play in the cheapy biotechs because that 2.5 put strike, you could easily be wearing. Look at Vroom not too long ago, right? Selling the 2.5 puts. Or us with EDU on oddities back and selling the 2.5 puts. And then you're wearing the stock. So it can certainly happen, even though you're getting a nice chunk of juice here, 65 cents. Mr. Rock Lobster, someone drawing a pretty sizable line in the sand on a biotech that just popped 40-odd%. What say you, sir?
It does look, it's a, it was $60 at one time. I had to go back all the way to the heady days of July 2020 when they probably thought that they were going to do something. Any biotech that might have said, COVID, would go to the moon. So I think on this one, yeah, a line in the sand puts, sure, like at the money. And, and maybe they have something going on, maybe some of the Regeneron news or, a lot of the drug stocks have been actually fairly positive recently, which is surprising because didn't they just pass some kind of reduced drug cost thing? I remember Biden kind of touting that. The drug stocks have been pretty strong since then. So I guess since they know what the deal is now, it'll be easier to go forward. Yeah, but it does look like it has the whiff of line in the sand activity for this particular stock, and it looks like it's still kind of going up a little bit because I'm seeing those. I mean, the OC 2.5 puts for 65 cents. I mean, if we were getting that for that stupid Oatly ice cream maker, we'd be pretty happy right now. I have to say, because we're not getting that much, and the OC 2.5s are 40.50. So, I mean, test number one is they're making money on day one on the put sale. So that's a good sign.
Speaking of passing, looks like Queen Elizabeth has officially passed away. They just put out that announcement. So Prince Charles is now King Charles. They're saying the king and queen consorts will remain in Scotland and then come to London, I guess, tomorrow there. So there you go. That's the news everyone was waiting for out of London. Doesn't seem to be impacting. Markets are actually rallying. So intriguing stuff out there as we keep on rolling to our final name here on the odd block. Patterson UTI Energy Inc., ticker symbol PTEN. Talked about this one once or twice in the past. Let's see, a year ago it was trading $7.50. This is a pumping services and directional drilling equipment manufacturer. And then they shot up hard, as you might imagine, hit their high for the year at $20.50 in May. And then they sold off again down to pretty much where they are right now, $14.41. So they're having a rough last couple of months. Looks like someone is deciding to draw a little bit of a line in the sand here, Mr. Rock Lobster. The OC 10 puts going up for 14 cents. Another one of these awesome markets. No bid at 30 cents. You can't put no bid. You got to be bid for something. So yeah, 14 cents. I'm going to go out on a limb and say they probably sold these 5,150 times. That is a 77 vol. The stock was a little bit lower, 1407. So the stock has rallied. So these are looking a little bit better. Mr. Rock Lobster, not the most aggressive line in the sand we've ever seen. But then again, the low is 670 on this stock. So it can get back there. What say you about this somewhat indifferent line in the sand in P10, sir?
Again, I view most line in the sand puts as dividend alternatives. And, they're like, okay, I can own the stock and I can get a 4-cent dividend, or I could sell this put and collect the stock at $10 and get a dividend, but I'm selling this put for 14 cents. So this is kind of like the old school line in the sand where, they're looking for their bucks, and they'll take it in this style. So again, I always think these are pension funds. If I ever looked at a pension fund book, I would know for sure. But I know in the old days, it was they were always kind of the more the professional brokers that came in with this kind of paper to sell all this junk. So again, line of sand put, not terrible. I mean, again, if you want to pick up the stock at the year low, and if you wanted to buy the stock and collect the dividend because you don't think there's a lot of upside right now, so not bad. You're getting 1.4% return till October 21, which probably won't end up looking too bad.
And let's see how the strategy block looks, because it's that time, listeners. It is time for a little bit of the old strategery.
It's time to dispense options, wit, wisdom, and education. It's time for the strategy block.
All right, everyone, welcome to the strategy block. A little known fact, in addition to the fact that Uncle Mike started his career selling life insurance, also a huge Anglophile. So this is a rough period for him. Mr. Uncle Mike, our condolences from the show on the network here, sir, on the loss of your dearly departed queen, sir.
For sure. Anyway, what I wanted to talk about today in the strategy block, I talked about a ratio call spread last week. This week, I want to talk about a ratio put spread. And why the heck would you even think about selling one or buying one or whatever? So here's the setup that I want to go through. Normally, let's say you like a stock. You like XYZ stock. It's at $50. You like it at $50, and it's trading at maybe $53. So one thing that you can do, and we've talked about this quite a bit, is you can sell a 50 put. If the stock goes down to 50, then you would be obligated to buy it at 50, which is the price you wanted to buy it at anyway, and you can essentially get paid for buying the stock. How exciting. However, let's take this to the next level and let's have some fun with us. Let's say that you think the stock is going to go down to 50 and you want to buy it at 50, but not only do you like it at 50, you think it's going to go down to 50. Well, a couple of choices that you have. Number one, you can just put in a limit order to buy the stock at 50. You can sell the 50 put, which we've talked about on the show, but you want to both make money down when the stock goes down to 50 and then get into it when it's at 50. Well, what the heck can you do? Well, let's talk about that. Let's say right now the stock's trading at $52.50. You can buy a 52 half put option for, let's say, $1. And simultaneously, what you can then do is you can sell not one, but two 50 put options for 50 cents each. What on earth are we going at here? So let's review it. You're buying one 52 half put, selling two 50 puts. You're going to do it for even money. I like doing these for as close to even money as I possibly can. Sometimes it's a little bit of a debit. Sometimes it's a little bit of a credit. I like looking at these for even money. Now, why is this even money? What on earth does that mean? We paid $1 out of pocket for the 52 half put. We're collecting 50 cents each for not one, but two 50 puts that we sold. And so by doing that, we have an even money trade, meaning it doesn't cost us anything. Now, even money does not mean it is free of risk. Also, a credit does not mean a trade is a profit. So make sure that you have an understanding of that before you do any of these types of trades. But what this does do is this will give you the ability to participate in downside from 52.5 down to 50 at no cost, meaning that 52.5 put cost you nothing because you got a credit on one side of it. Now, does that mean that since you got a credit, you get a profit? Good gosh, no. There's risk involved in this. So let's go through where the risk would be. The risk is from 50 and below. So let's say that you do this trade. You have that 52.5 put option. You're good to go. You're in the profit zone from 52.5 all the way down to 50. That's where you can make your maximum profit. Your dream expiration price would be $50 per share. However, with that, let's break down these two trades. You have a put spread with the 52.5, 50 put spreads. Let's say you're using one of those put spreads, we're attaching to the long put, and from there, you can make money off of it. Where your risk comes in is that you have to take on the risk of the stock itself. If the stock goes to zero, you're going to go to zero right along with it because of the fact that you sold that 50 put. So with that, this is a trade that you would do if you believe the stock is going to go down to 50 and you'd like to own it at 50 anyway, and you want to profit on the way down for doing that. So you technically are in the profit zone all the way to 47.50. Now, how on earth does that work? Well, let's say you're right at 50, then that means you have a $2.50 profit because all the short puts expire worthless and the long put is at $2.50. Now, as the stock goes lower, one of the long puts is just going to be mitigated. One of the short puts is just going to be mitigated by the long put. So 250 is as much as you can make there. But you'll start losing on the short put that doesn't have any other option attached to it. So by doing that, the 250 that you can profit on the one side is kind of your cushion to the downside. So 47.50 is your loss point. 47.49 would be where you would start to lose money on this trade. Once again, it's not a simple trade, I will admit that, but it's something with which you can do if you're traditionally a put seller and you want to make a little bit more money on the way down. It's something to consider. If the stock stays the same, then you're better off just selling the put. But if you really believe the stock is going to go down to that level, you'll be better off doing this. And once again, I'm giving you expiration day risk reward. That will vary between now and expiration when you do that. So that is my strategy block for today.
Thank you, sir. And now let's keep on rolling. It is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody. It is that time, listeners. Time to go around the block, tell you what we're keeping an eye on for the rest of this week into the weekend till we can gather here together on Monday. Really quickly, let's break down our question of the week right now. We're asking you, there are many different indicators that traders use to signal red flags in the market. Which quote-unquote red flag indicator is most important to your trading? Gave you 3 choices and then the infamous other. Inverted yield curve, backward VIX curve, the old death cross pattern, or other. And we've had some write-ins for VWAP, a few other things. So if you have an indicator that you use to signal the end is nigh, I'm curious. Send it in to us. Hit us up. We'd like to hear from you. Right now, 39.4% of you are going with the old standby of the inverted yield curve. 27.3% saying the backward VIX curve. 24.2% actually, saying the old death cross. I do maintain at least half of that vote. It's just because of the name. It's a cool name. And then 9.1% saying other. Let's go around the horn. Mr. Rock Lobster, if you have a vote in our poll, have at it. If you have, I'm going to guess you're probably going to go the backward VIX curve, but you may surprise us. And then B, what are you keeping an eye on for the rest of this week until Monday's show, sir?
Well, I think the backward VIX curve, continues to be the best thing to look at. So I'm going with that. I don't know. This is a good one. I'm not quite sure what the listeners have on this one. That's a good one. I still think the backward VIX curve is the best one, though, for me. So I'm going to say the listeners are savvy because they listen to the show, and they're going to say backward VIX curve as well. And as far as what I'm watching for the rest of this week, I think the rate die is cast. And I expect VIX to kind of crash here over the next, we're going to have a CPI number, but by the end of next week, I think we'll see a much lower vol, and the market just kind of just pops around here for a little while with little to do. So that's what I'm looking for as we go forward.
Clearly, you, sir, are not savvy because I revealed the answer that it was almost 40% saying the inverted yield curve. So our audience going that way. I told you the technology gods not going to smile on you today. Mr. Uncle Mike, sir, if you have a vote in our poll, have at it. And then B, more importantly, what are you keeping an eye on for the rest of the week into our next episode on Monday, sir?
Well, as much as I'd like to say Death Cross, because it is kind of a cool name, I have to admit, I'm going to go with other. And my other is non-existent because 100% of the time in the history of the stock market, whenever the market is pulled back, 100% of the time, not 90, not 80, not 95, not 99, but 100% of the time throughout history, the market has come back to make new highs. Anyone care to argue that point?
I guess if you have an infinite timeline, sure, go crazy.
There you go. So there you have it. And it has made new all-time highs within 100 years. So there you have it. So anyway, that is my vote on the case. And in terms of what we're watching in the upcoming markets, ironically, I got on my soapbox, but I am going to say in the short term, I think it's important to just be careful with this market because of the fact that it is very choppy right now. And 4,000 did not hold. Moving averages did not hold. So even though over the long term I am a bull, which I have expressed at least once on this show, I do think now is the time to err on the side of caution.
Uncle Mike says, go to cash, everyone. Panic. Hit the exit button. Straight to cash. That music means, of course, we have to hit the exit button on this show. Don't worry, I'll be back in a little bit to break down the world of futures options on TWIFO. And, of course, tomorrow, big episode 500 for Volatility Views. Before we go, let's go back around the horn. Let's start with the rockingest of lobster, Mr. Rock Lobster. Sir, if folks want to find out what you're cooking up in the land of the pit, where should they go? What should they do?
Yeah, go to our website, optionpit.com. I'm revealing the biggest trade opportunity of 2022 tonight.
Oh, that's no small amount of hyperbole, sir. I'm intrigued now.
No, because I think we do. We have an interesting crossroads, and the Fed spilled the beans, and I think it's a great one. So show up at 7 o'clock. Go to Option website, sign up for the webinar. It is 1 hour of your time. Starts at 7 o'clock. Get you done for football, and on you go.
There you go. Optionpit.com. Done in time for football. It's a big selling point. Football back tonight. Mr. Uncle Mike, A, how excited are you about the return of football? And B, what's your folks go to learn more about what you got cooking, sir?
Well, in terms of how excited I am about football, go Buffalo. This is the year for them. This is the year they're going to win it all. And tonight they're going to pound on those Rams.
I took your boy Josh Allen in my fantasy, so I'm going Buffalo too. Go Buffalo, baby.
Bills make you want to shout. But, yeah, I'll do that. And if you want to learn more about what I do, go to my website, stcharleswealth.com. If you want to get a financial advisor who not only is a diehard Bills fan, but also uses the option product when it's appropriate for the client.
There you go. stcharleswealth.com is the place to go. We got to get on out of here. Back, like I said, in a little bit for all you live folks with TWIFO. All you on-demand folks have to wait a bit. Be patient, then hit next on your device of choice, and it should be hanging out there waiting for you. Then back again tomorrow, like I said, noon Central for Vol Views 500. That's open to all and sundry. If you want to join us live, click on that Mixler link. You'll be able to join in the old partay. Back after that for Options Oddities. Then, of course, back again on Monday, another episode of the Option Block. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.